Hi, everyone. Welcome to this web clinic. I thought it might be useful to do this. Just let me know that you can see and hear me and post any questions that you want as well, please. The other thing is, if for any of you the main screen looks a bit small, just look at the top right-hand corner of your screen. There's sort of two diagonal arrows. If you press on those, it should open out and get rid of the sort of questions, polls, and slide on there as well. I'm just keeping an eye on the markets and everything that's going on at the same time as doing this. So just let me know that indeed you can see and hear me. I can see that we've got quite a few people just signing up through there now. Welcome, everyone. And my job is I'm going to answer all the questions that you might have more broadly about the markets. In terms of doing that, yep, I can see audio, visual, great. Everyone can see and hear that all looks fine. So I'm going to get on with some of the things. Now, before the questions start coming through, a few seconds are all okay. Interestingly, it keeps saying start live webinar. I thought I'd started it. Anyway, before it all starts coming through, I just thought I'll just show you some of the things that I'm looking at the moment. Like I said, you can make the screen, I'll zoom into this, so don't worry. You can make a full-blown screen by clicking on Enter Full Screen Mode, which is next to the little bell on there. Okay, so what I want to do first and foremost is just show you just what's going on more broadly with the market as well, and then go through and answer some of your questions on this. So let me start off with some of the indices. Okay, let's just start off with some of these over the last couple of days. Where are we on these? And I'm just going to show you some of the movements just to give you a feel and flavor, just a top-down approach into where we are in the world and what's going on. Because that will at least give you some degree of perspective. Thanks, Wade. I've got your question. I'll answer that in just a second. So where are we at the moment? Well, forget the Russians for now. Can you believe that over the last, 3 months, we're down 32%? Yes, of course you can believe that. I'm going to share some images of where and how low I think we could go. Let's just look at this on a 3-month basis, shall we? Obviously, you can see, Danny, I'm going to look at the major indices. The Parisians are down 32%. The Footsie is down about 31. Obviously, when something's down 31%, were it to return back to its initial stage, then imagine something's gone from 100 and it's down now to it's down 30%. It doesn't mean it's going to recover 30%. It means it's going to go up over 40% to give you your returns back. Okay, so when I look at the Footsie, some of the big questions at the moment people have are, well, have we reached rock bottom? Where are we at the moment with this? I'm going to give an overview of where I think we are on this. Okay, now where we are at the moment with the Footsie, again, just trying to put it into some kind of perspective, is where we were back in 1997, right? When we've had these levels before, for instance, in 2002, I don't mean to scare you, but we could go, we've been at this level before in 2002. And when we were there before, we went as low as 3,300, right? I'm not saying we're necessarily going to go there, but I would not be surprised if we went certainly as low as 4,000. Now, that's not a big drop, 4,000, given that when you look at the prices this morning and where we are, we're about 4,900. We're only 900 points, which isn't much, which is not much, from hitting 4,000. And therefore, hitting 3,200 looks highly likely. The question then arises, well, that would, by the way, bring us to about 1994 levels. The question then arises, if we get below that, then obviously all bets are off. What are we looking at? Are we looking at 2,400? Are we looking at sort of back to 1987? Are we starting all our lives all over again? I'm not trying to scare anyone. I'm just sort of giving you the data as I see it at the moment in those terms, okay? So let me just move that out of the way for a second, and I'll come back to some of those and the charts and what I'm seeing and where I anticipate it going back to in the currencies. What I want to do also is just go through some of the images that I've been putting on previous to this. as well. Okay, some of the images that I've put on my various channels. I just want to share some of this stuff with you. Okay, Medtronic, I've had a quick look at, just looking at seeing there's some talk. Elon Musk is looking at ventilators. That's more speculative. I don't indulge in news-based speculation, but I just wanted to share that one with you. They, according to our analysis, are about 30% undervalued. As you can see from what I've said about the broader markets and the likelihood, I think they're going to fall further, and I'll show you some images in a second how much further I think they're going to go. 30% undervalued isn't that bad. Okay, isn't that bad? Great question, Ajay. I will do that. I'll answer that question as well. I just want to make sure you can all see the screen that I can see with Medtronics on it. Just want to make sure that is clear. Okay. Now, one of the things I want to show you. So this is the Dow. I know it looks a little bit faint on your screens. Like I said, next to the bell on your screen is 2 arrows. You can make it full screen. I'll also be recording this as well. Okay, so this is the Dow. Thanks, Wade. This is the Dow. 1600, definitely. Could it go lower? I would not be surprised at all. For the Footsie, like I said, I've done a projection of below 4,000. That's why when people have said to me, some of my apprentices have said, "Oh, shall I buy now? Shall I buy now?" And I've said, listen, I think we've got lower to go, I'm afraid. And I'll show you why as well. I think we've got lower. The good news is we're going to have a sharp, this is from Cazenove, and I think we're going to have a sharp rebound. Okay, like I said, I'm flipping through some of these a little bit quickly. They're going to be on. I'll make these slides available to you, and I'll as well. And and this is being recorded. Right. So let's just go through some more of the images that I want to show you as well. This is, like I said, the Footsie. Just go through it in the right direction. Now, this is the Dow and where things were 3 months ago. My point with this was simply to say not all falls have been the same. Does this mean I'm buying into Boeing? No, it doesn't. I think they'll get a bailout. But because I think the markets are going to fall further, whilst I've bought some Apple, as some of you will know, and I continue buying little bits of Apple, that's because I intend to hold it for a long time. Now, listen to this really carefully. This is really important in terms of strategy. If you are holding things for the very long term, then it matters less the precise moment you get in. If you're holding things for 1 minute, it matters very much when you get in. If you're holding things for 10 years, it matters a little bit less when you get in. Even then, of course, you want to try and get the bottom. So with somebody like me, I don't mind buying a tiny bit of Apple, let's say this morning, knowing that it may or may not fall down a bit more, but it's probably only going to fall down a tiny bit more. Something like a Boeing could halve from where it is today. So for something like that, which I don't intend to hold for the long term anyway, because I don't like airlines, that would go in the speculative, risk-taking, almost gambling, and I don't want to be involved in that. Understood? That's why when I post some of these things on Telegram, I try and make clear the strategy and the thinking behind it. Now, of these, you will know I own some Microsoft. Why? Because they've got a shed load of cash, and as you can see, they've hardly dropped. You know I own some Apple. I haven't yet bought Johnson & Johnson, Procter & Gamble. I have bought Walgreens, and I will talk about the reasoning on these more on Telegram as it happens. Visa I've not bought because obviously if nobody's spending any money, I think that could fall a little bit lower as well. Thank you, Raj. I'll explain Apple to leverage shares as well. I am not going to buy McDonald's because they're shutting down and it's too speculative at the moment. So you can sort of understand. Now, I did videos on this, on every single one of these and what I was looking at and why and what my interest was. And I own some Goldman Sachs. Why? Well, those buggers are always going to survive. But more importantly, I think the Chinese or rich companies generally, and the Chinese have got a lot of money. They're the ones who buy American debt, of course. And they own American debt and a shed load of it. They've got a vested interest in the American government recovering. And I wouldn't be surprised if Donald Trump soon says he's not going to be paying back some of that American debt. Anyway, that's speculation. But the Chinese will almost certainly look at some takeovers, not necessarily of American companies, but possibly of British ones. And people like Goldman Sachs will be the investment bankers to do it. JP Morgan as well, you will know I've bought some of. And the reason for that, if you followed my webinars, is because if you were to liquidate everything and JP Morgan was just to have a fire sale, they are still well valued. And that's thanks to the credit crunch that happened before. Anyway, I will go into some more of this detail in a second. This is, don't worry about this. This is a contribution to the fall in the Dow so far of these companies in the Dow 30. The Dow Jones is composed of 30 companies. This is their contribution. This is on my Telegram channel anyway. You'll have seen this and you'll know how to get hold of it, which is just how long it took before. I think this will take a lot less time. I won't go through each one of these images. This recovery will take a lot less time than previous ones have taken. Now, Raj has asked me, can you explain AAPL2 leverage shares if you get time? As it's difficult to understand having never dealt in these sort of instruments. Okay, let me explain what these are and the risks. Let's focus on the risks associated with anything and everything that I might ever talk about on these channels. What he's talking about is, I'm going to try and find the image if I can, is a whole a group of products called exchange-traded funds. Now, those of you who know me from my Financial Times column days will know exchange-traded funds, and I'll do a separate webinar on them, are basically index trackers. They're rather efficient. They're very popular. Some are very high risk. For instance, the Euro Stocks Banks 3 times daily short is incredibly high risk. What it does is it takes a basket of banking stocks through Europe, and it says for every dollar they fall, the value of this index tracker will go up threefold. Now, why is that risky, Alpesh? Well, because if it goes in the other direction, because it's leverage, you could lose a lot of money very quickly. You could never lose more than you've put in because these are effectively shares. Okay, so you can't lose more than what you've put in, unlike with a spread bet or CFD trading. However, because they're leveraged, if something fell 10%, you'd be down 30%. And therefore, it would have to recover 50%, even though it's triple leveraged. So just the way mathematics works out, they're more risky than a regular tracker. However, you might say to yourself, Alpesh, I like the look of this Footsie 100 daily short, because for every pound the Footsie drops, this goes up £1. Now, why are these popular? Well, for obvious reasons, they allow you to hedge. What's the problem? Well, what if the Footsie suddenly explodes upwards? Then you wouldn't be hedged. Now, on this, what's Wisdom Tree? They're just one of many providers of exchange-traded funds. Okay, and SUK1 is the ticker symbol, just like the ticker symbol for Barclays is BARC. Which brokers offer this? There are many brokers which offer this. What I've done is I've listed, I don't have any affiliation with any of the brokers who offer it. If you go to trading-champions.com, I have listed not just the Telegram channel, but also the current brokers that we've gone through. There's a whole list of brokers which offer it. I don't care which broker you use, but these are the ones which Hargreaves Lansdown Interactive Investor, they're not going to steal your money. They're well regulated. They happen to be UK ones. We don't have any link with them because there's not even a URL you can see. You'll just have to Google their names and find them. I got that list from another source and I looked at it and I said, yeah, these are fine. These are ones where nobody's going to lose their money. Okay. So you'll find them there. This is all free. Trading-Champions. Most of you are probably on this already. It's where I post more detailed things, including this video afterwards will appear on there. So out of these, which might catch my eye at the moment, I don't look at gold, for instance. Other people do. Some say I've got a view on gold, and therefore they might take some of these products. And there's a whole range of these, which all the brokers which I just listed offer. Now, why are exchange-traded funds interesting? And like I said, I'll do a separate webinar on them. The reason they're suddenly of interest to people, I'll try and pop it up on a window here. The reason they're suddenly of interest to people is because they're an index tracker, so they're a basket. In that regard, they're somewhat safer than, say, buying an individual stock because they're naturally diversified. However, if you are buying a short one, for instance, short the Footsie, there's a greater risk because on the whole, the Footsie over a long period of time tends to rise. Equally, if you're buying triple leverage, there's a risk because the way mathematics works, it's higher risk. So do you understand, while some of these products, sorry, the reason I'm looking away is I'm trying to pull up the exchange-traded funds whilst I'm talking to you all at the same time. Oh, here we go. And the danger there becomes that the leverage could work against you. Maximize window. Here we go. So just to show you some of these. Now, I'm not saying these are suitable for you, as you will see from the, let's just scare you a little bit first. Look at this. This is the direction natural gas related bull 2 times shares. Well, guess what? 98% down. You've lost 98% of your money. Okay. So as you can see, some are incredibly risky. Before you get greedy, yes, this oil one daily long pound, 26,000% in 3 months. I didn't own it. I wish I did. The VIX measures volatility. So these exchange traded funds measure a lot of different things. Okay, I tend to use them more for the safety related aspects, such as the Footsie, you know, the more dull stuff. I don't speculate on these. All right. So I don't go around thinking, oh, I'm just going to look at what's gone up 300% and so on and so forth. The VIX, for instance, I tend not to look at the VIX. Some people do. Good luck to you. I'm not saying it's good or bad. I'm just saying it's not something, you know, I can't look at everything on the planet. So let's just have a look, for instance, just to give you an idea of how these work. Let's look at the Wisdom Tree Footsie 100. It just happens to be Wisdom Tree. Other brokers might offer iShares or State Street. Doesn't matter who the provider is. They pretty much work the same way. Okay, so let's say you're looking at this. And this has, of course, shot up from 1,000. So if you put £1,000 here, suddenly you've made £1,500 in profit. It's gone to 2,500. The Footsie 100, 3 times triple short. Now, given that the Footsie, I think, is going to fall, I bought more of these. Having said all of that, that doesn't mean it's suitable for you because they're triple leveraged. I don't know your personal circumstances. You might be a widow who's got £100 in her bank account. So I just want you to make sure you take advice from people for your own personal situation, because we're now in a world where it's not enough for me to say just use risk capital. Some people are, you know, they're looking at their financial future. So I'm just giving you the education for the moment. You've got to work out what's suitable for you. Because look, the Footsie could rally tomorrow. I don't think it will, but it could rally tomorrow and you could be down again. Okay, because they're triple leveraged. But I just wanted to share these with you so you understand them. They trade just like shares with a regular broker. Because they're not spread bets, because they're not safeties, you can't lose more money than you started off with. And you can see that there is so many of them. Not all brokers will offer all of them. There are far more than I could ever claim to be an expert on, as you can see from that screen. Okay. So hopefully, that answers your question, Raj, and that was clear. However, would the 3 times going to be offset by a lot of costs related to? No, there's not a lot of costs, Raj. I mean, great question, Raj. There's not a lot of cost associated with these. That's why exchange traded funds took off, because the inherent cost involved in them was a lot less than mutual funds or investment trusts. And investment trusts I don't like at all. I've written whole books on investment trusts and why they're a rip-off, and fund managers are rubbish at what they do. I've published it in the Financial Times. I won't go into it now, but that's a separate issue. Okay, just so you know. Great. Just another question. Ajay said, in such events, how do we ensure our cash on stocks held with brokers are protected? What if any broker goes bust? Anything we can do to protect that? Absolutely brilliant question, Ajay. Just on that point, if it's, and I'm going to talk about the UK first, if it's FCA regulated, they're protected. I've forgotten the amount. I think it's £100,000, but it could be £75,000 per account. Okay, so you should eventually be able to get your capital were a broker to go bust. Despite the markets moving so fast in so many different directions, I think in actual fact brokers are making a lot of money because they've learned from the past that they widen the spreads and they increase the margin that you've got to deposit with them. So it's more likely you're going to go bust than they are. The best way to reduce risk is obviously most risk-free thing is just to use this period as to learn and monitor and just make notes so you don't actually trade. Okay, but that's not fun for many of you. Or forget fun, it's not, you know, interesting enough. So the other way to do it is to make sure you've got risk capital always and a very small amount relative to the total capital you have. I don't like using more than 10% margin in my account. Yeah, I know it sounds pathetic. People go, what? What about the other 90%? Go nuts. No, because it protects me against wild swings and it avoids psychologically that I don't never, ever have to panic. Now, you might say, well, you're very conservative. I'm a fund manager. I'm a hedge fund manager. Of course, I'm conservative. I've got a whole business to look after. Okay, so that I take that into my personal life. Now, some people might take more risk. I'm not advocating necessarily more risk. You only need to look at some of the things that I've just shown you to see why I'm not necessarily advocating more risk. By the way, while we're on here, let me just show you the 2-day stuff. Now, I look at these things for fun. just to see what's been. Forget Wells Fargo because I don't know that one at all. Let's just look at something which we might understand and see how they've done over the last couple of days. The very next day, these could easily just implode and go down. You can see that some are very specialist. I mean, look at this. Invesco Morningstar US Energy Infrastructure, seriously, up 30%. I could not even begin to tell you, oh yeah, get into that. Natural gas, 3 times daily short, given the collapse in global market demand for natural gas. Yeah, I can see how that, the daily short is making money. But am I in it? No, I'm not in it because I've not had a chance to look at it. I like to look at data. I like to look at stuff. So I can show you stuff you might want to research yourself, but I'm not saying that I have looked at any of these. I mean, of course I've not looked at daily Russia bull 3 times shares, which are up 25%. Because tomorrow morning, look, that could be down 88%, and it has been over 3 months. And I'm not in the business of trying to find things which have fallen 90% and then see if I can just get a bump on them. And I'll tell you why. And I wrote, again, an article in the Financial Times about this. If something drops 90%, you might think, well, that's a good purchase. Would you agree with me? If something drops 90%, it could drop 95%. You're going to say yes. Do you know what takes something from 90% to 95% drop? It's not a 5% drop. It's if its price halves again from 90% drop. That means it's gone to 95% drop. Okay? So if you agree that if something drops 90%, it could easily go to 95% down, what you would also agree is that you could buy into something at 90% drop and it could halve in value. Do you want to risk 50%? Presumably not. And people don't realize that maths, and that's the crazy thing about maths in trading. This is how it works. Okay. So I've answered that one. I've got Wade's question. Wade's question is, if a cure announced for the virus, what do you think the market recovery time would be, and which stocks would you focus on first? Cure or no cure, and they're saying, yeah, they'll find some kind of vaccine. The problem will be getting it to enough people. Listen, they can't even produce face masks quick enough. They're not going to produce a vaccine. They'll produce a vaccine, maybe, God willing, tomorrow morning. I think you're going to get your hands on it? No chance. All right. So in that sense, it's just not going to matter. What I will say is, what would I focus on first? For how long do I think before the recovery? Let me share that with you in terms of what I think in terms of recovery times. First of all, just to recap some of the things that I'd previously mentioned. Is this. This is roughly where the US is at the moment. In other words, we're going to have a string more of bad news, I'm afraid. Okay, because it's just starting to escalate. Now, political cultures matter. The reason China could get on top of it is because ever since the Mao Zedong's revolution, on the whole, the way in which the Chinese political culture works is you listen to what you're damn well told, on the whole. All right, so when they tell you stay indoors, you're going to listen to them for a whole variety of reasons. It's not a political system I particularly like, but at times like this, it's the ideal political system. In Britain, in Western Europe, we're not like that. Our political culture, sadly, for this purpose, means that we're more prone to get these kind of viruses. In the US, they're even more into freedom. And lockdown's going to be even more difficult. So as the negative news comes, we're going to get more falls. I've already given examples where I think the Footsie and the Dow will go to most probably. Well, even lower than that. I think we're looking at as low as, like I said, a bit lower than that. I won't go back into these. How quickly do I think the recovery is going to happen? Those are the figures from Goldman Sachs. The average decline on an event. Okay, the average decline on an event-driven thing is about 30%. We're already there. I think it's going to be longer on this one. Remember, that's the average. Therefore, some things are worse. This is going to be worse. Takes about 6 months for that to happen. I think it'll be less. I think the recovery will happen sooner. So it'll be sharper than average, but the recovery time, and the length will be shorter as well. It'll be done in about 4 months from start. So about 2 more months to go before we hit bottom, maybe even 1 month, 6 weeks before bottom. The recovery is normally 18 months. I think in this case, it'll be sharper given the amount of money being thrown at it. Those are the key figures that I can give you there, Michael, on those things. When are you likely to do ETFs and investment webinar? Might be tomorrow. I will send an email. I will make sure. Whoops, let me just do it this way. When are you likely to do ETFs versus? It's not versus investment trust. I don't like investment trust. They're higher cost. I until very recently, for the last 15 years, sat on Chatham House, the Royal Institute of International Affairs Investment Committee. So I was one of the 5 people on there who would decide where we allocate our money. And just so you know, it was a very important activity to do, that our patron is Her Majesty the Queen. So we would decide where money goes. And I would ask, whenever we were investing in trust, why am I not just using an index tracker like an exchange-traded fund? So don't even talk about investment trust. There is not a good investment trust out there because of their inherent costs. I'm not going to do a whole session on it now, but because of their inherent costs. And I've written about it in the FT, and there's other data which I'll give you in that webinar. Exchange-traded funds are popular for that reason, and they're a lot cheaper. And I'll try and do it tomorrow because I know there's a massive demand that people have for all of this. Okay. So yeah, it's probably going to be tomorrow. Right, here we go. Ajay Thacker. Hi Alpesh, what's your view on miners? Don't look at them, I'm afraid. So I couldn't give you an idea on it at the moment. I've not looked at them. Mining and gold and commodities tend to be such a specialist thing. I've not really looked at it. I'm just going to see if I've got anything up at the moment. Yeah, okay. Well, this is not one of my trades. It's one of my I'm just putting it up on the screen. So there you go. That's one of our team members. So I don't personally focus on it, but we have teams who are allocated to different things. And the way they look at it is not for the longer term. They look at it on the short-term trading, as you know, on my indicator. So this is what they're looking at on that. And I hadn't got the update just now as we were speaking. This is what's happened to it. So he's made a bit of a killing. But yeah, it's not based on fundamentals. Here we are looking at trends. We are looking at directions. As you know from my indicator, we're looking at pattern recognition. And yeah, that's just shot up. And that's what we do. I mean, as you know, from if you've been on my webinar, you'll know that this is what I do. Okay, we look at the patterns that happened before and the trends, and that's as close as I get to the miners. I don't, because it's such a specialist subject. I don't tend to look at them on through this data that I have here. Okay, I will at some point, if you want me to, go through the data that I got for the Footsie, for the US stocks, exchange traded funds, like sort of the indices I've covered as well, but I can do that in this webinar as well. I have got another question from Michael Gracie. Recovery is defined as a return to previous highs or a turnaround on the weekly monthly chart. The definition of a market bottom is it's something bottoming. Okay, and a recovery is where it doesn't touch that bottom again. So it just keeps going up and up and up after that. So in one sense, you can only tell if a recovery's begun in hindsight, right? So that's what it means. Average time to recover means to go back from the bottom. You measure the time from the bottom was hit to the point at which it gets back to where it had reached when it started declining. It's a little bit technical, but essentially what it means is how long will it take for us to get to our February highs? That's what it essentially means from the bottom. And we don't know if the bottom was today, then it'd be from today until, but we don't know when that bottom is. So in one sense, it's not very useful, is it? Because we don't know when that bottom is. But like I said, I've given you an idea of where I think the bottom is on that one. Okay. Let me know any other questions as they're coming through. As some of you know, for the longer term investing, I've been focusing on Altman Scores, which is a measure for companies of their working capital, incredibly important at this time. The total assets that they have, even though those assets might be devalued somewhat, important. Retained earnings, how much profits they've kept in their bank accounts, incredibly important. That's why Altman Scores, which are a measure, this is a formula, I didn't invent it, it was invented in the 1960s, is a measure of how likely a company is going to go bankrupt. So I want there to be high Altman Scores, which means less likely to go bankrupt. And you'll know from my previous webinars, I did that just to show you what these are looking like at the moment for some of these companies on their Altmans. And I'll come to Croaky in a second. Okay, so if I were to look at some of these, and I might say, well, wait a minute, which ones have fallen the most? I might not, well, I'm probably not going to say what's fallen the most. I'm probably going to say, well, what's holding up really well and what's got a high Altman, like this one. Now, I don't know this particular company, but let's have a look at it. It's got a relatively high Altman. There you go. above 3 would actually be safe. So let's say we'll stick to above 3s. Well, this one's got a ridiculous high one, but a very low croaky. I'll come to croaky in a second. This one's near as damn it. There you go. Indigo Vision Group. Who the hell are these guys? So then I look at them. Well, they've already shot up. Somebody's already got there before me. They've just shot up tremendously. Now, I haven't done the research on this one, so I've got to look at it, but it's gone up to 400 from 200. And you can see its highs in the past have been 1,000, so might it double up again? Well, one thing which is reassuring is their Altman scores. And I'll come to croaky in a second. I can see I've got a whole load of questions coming through. Just give me a second, guys. By the way, croaky, if you're interested, this is what Goldman Sachs uses as a measure, and I know they're going to be using it right now because this is one of their slides, and that I got from one of the lunches I'd had with their former chairman back in the day. Anyway, this is what they use for their wealthiest clients to measure the valuation of companies. Cash flow, incredibly important. Has the company got the ability to generate cash based on the capital that it's invested in the past? Now, that's important because if a company can't generate cash, it's going to die. All right. So I know that Goldman Sachs happens to be looking at croaky. So I also happen to look at it. Now, I will post, because things are changing every day, on Telegram. That's why I do it on Telegram. If you don't know my Telegram channel, you'll get it at the end of this webinar anyway. It's freely available to you guys. You should all have it because you've got an invite here. You would have had that. I will post what I like the look of when I like the look of it. There's too many companies for me to comment on, you see. So just because you might say, oh, what about Starvest? Look, good Altman score, good, great. Yeah. Given how many companies there are on the planet, and yes, it's gone up 15% in 2 days, it's up 100% in 3 months. Yes, it ticks every box. What is it? I don't know what they do. So could I comment? Yeah, they're up here. They could go up to there. They could go up fourfold. But I'd have to research it. So I'm just saying to you, some of the things I look at, I might even share data with you like this. But then you're going to have to pick because I can't research every single one. I will tell you what I'm buying, though. But like I said, even if I picked every company with a high Altman and croaky score, which is up over the last 2 days, I would not have enough money going through 2,170 companies. And let's say I had 500 which came up. What am I supposed to do? Put 1,000 in each one? That's £500,000 and have 500 stocks? No, that'd be too stupid. Okay, so do you see how what I might pick and you pick might vary? But what's important is that you're aware of their Altman scores and you're aware of their croaky numbers. And I will share that data with you on the Telegram channel and elsewhere. Okay, can we get hold of your croaky tables for all? Whoops, sorry, Michael. Can we get hold of your croaky tables for all FTSE 100 companies? Yes, you can. Actually, what I might do is, it's a very good question. I might download this as an Excel spreadsheet. The thing is, it's going to be out of date after a short while. It could be out of date, but that's a very good question. I think what I'll do is I will download, yeah, I can do this, export list table, and I will upload it onto trading-champions.com at the end of this webinar, and that might help you. So I'll put it on an Excel spreadsheet. Okay, I'm done. Here we go. I've got more questions. Start live. Surely croaky is backward looking, so not necessarily a good indicator of current ability to generate cash. Yeah, everything's backward looking unless you've got a time machine. What it does tell me is a company's ability to generate cash. They've got some infrastructure which allows them to more efficiently generate cash than other companies. So if I was looking specifically at a company which, let's just look at this concept of, because it's often a criticism of investing generally is that you're always backward looking. Yes, you're always backward looking. So let's look at the ability of a company to generate cash. It's interesting. It can generate cash, but does that mean it can do it into the future? Well, it's up 102% over 3 months. Okay, but it's down over the last couple of weeks, but only 16%. I wonder why it's not fallen more. Could that be because people think it's got the good ability to generate cash? Could it be because it's retained, according to its Altman scores, a lot of profits, and therefore it's got a lot of working capital? Because that's literally what the Altman score looks like. Looks after. It's telling you what it's got into the future. This is the cash it's got, this returned earnings into the future. This is the working capital it's already invested in. That gets carried into the future. Nobody can take that away tomorrow. So that added with ability to generate cash would suggest why it's only dropped 16% and is up 102% over 3 months in any event. So that gives me some confidence. Whereas to get 100% confidence, I'd need a time machine. but that gives me a lot better confidence than anything else. And you can see also, there's also the, if nothing else, given that Goldman Sachs managing trillions of dollars are also using these figures, then that's an additional factor. I might say, well, 1%, that's relevant to me as well. Okay, so that's something to think about, Michael, in those regards. Right, I have a drawdown my SIT, which is 100% invested in investment trust. Would you say that partial or even full change from that to individual shares is better idea in investment? That is a classic question for a financial advisor. Okay. I'll tell you what the problem with that question for me to answer it is. First of all, I don't know your whole circumstance. I don't know your age. I am also, whilst I'm an FCA regulated hedge fund manager, that means we manage institutional money for pension funds, not for private investors. And we manage it at our own discretion. So we are licensed to manage pension money for institutions, not for private investors. We are not registered and regulated to give pension advice. That's a whole different criteria. We're not in that business. So for that, you might want to speak to a pension advisor. That's what I'd have to say to you. The other problem with answering that question is this. It would be, it's a classic one of, I wouldn't have invested in investors' trust to begin with. So how do I now tell you to reverse engineer that and start from a new position? If you're already in them and they're already performing fine, my first generalization would be keep as is. Individual stocks are higher risk than even investment trusts. Okay, so if you want to look at risk reward or efficiency, exchange traded funds are very efficient, but they track an index. Investment trusts are active managers, and sometimes they can outperform the market for a short period of time, but on the whole, there's ample data to show they don't. Individual stocks, because they're individual stocks, are higher risk because they're just an individual stock. So I'd probably say between an individual share and an investment trust, you might be better off in an investment trust because you're in a basket, unless, like me, it's your job to know which stocks to get into and so on, which for many people is, oh, Alpesh, that's too much hard work. I'll just stick with my investment trust. And that's fine in those circumstances. I will just stick with my investment trust because not everybody's going to get a PhD in stock investing, if you see what I mean. Okay, but what I would say to all of you is it is worth filling up on your education of the financial markets at the very least at this time. Have a look at that free course, trading-champions.com, the material on there, because at least you'll be financially more literate and that'll help knowing what to do. And this is a great time just to, if you do nothing, if you don't invest or change your portfolio one bit, and at all in the next 12 weeks, if everybody became more financially literate, I would be delighted. Okay, that's really something which I think is so important. And of course, I'm going to say that because since the age of 12, I've been investing, and I think it's the most important thing to be able to do, short of medicine. All right. Okay. I've got another one. Let me see. Okay, which ones have I not answered? Rene sent an email, the Alpesh, and he will provide a new password. I did last week. Not sure what that means. I'll double check on that one. I think you mean for the 12-week course. I'll double check. We've sent to you. Brilliant. I bought Novatsit a couple of weeks ago and I've been buying and selling it on a daily basis, following trends. Today it's gone up 50% in opening. Do you still advise not to hold these AIM shares too long due to volatility? This is one, is a pharma company. I tell you what, a strategy that I've used with AIM shares, and you've done a brilliant message there actually, because it's useful for a lot of people. When you're trading AIM shares, and I used to do that about 30 odd years ago, take out your initial profit. Okay, sorry, your initial capital cost. So if you made, let's say you put £1,000 in and you made £1,000 profit, take out the £1,000 profit because that's your initial capital. Now you've got £1,000 still left in. Now you're just playing with profit. Knock yourself out. Knock yourself out with the profit. So that's the way I would do it. Take out your initial capital as soon as you can. Then you're just playing with profit. And in a way, it's free money then. Okay, so hopefully that helps. But yes, you're right about AIM and you're right about volatility. You're right about all of those things. Some of these are more likely to go up than not, obviously. Do you think there will be a bounce soon? I think I answered that earlier. If you didn't see it, I'd probably say we've got another... let me put it this way. I don't know how well you know statistics, but if you're trying in statistics to guess one thing or forecast one thing, okay, the probability of which being 0.5%, 0.5, okay, then that's a half probability. If you try and forecast two things, for instance, can I toss this coin and throw an odd number on a dice? the probability halves because you're trying to do two things, each with a half 50-50 probability. Therefore, you've only got a 1 in 4 chance of getting it right. The reason I'm trying to teach you statistics and answer this is, if you ask me, how much longer are we going to fall and by how much, I'm far less likely to be right than if you ask me one of those two things. But let me just try and answer it. I think we've got another, well, I've shown you the charts of how much further I think we'll fall. I don't know what percentage those numbers were. Have a look at the replay to see those, and I'll put it on trading-champions.com, the slides as well. They're on there anyway. Okay, that I've used, and I'll put the Excel spreadsheet and everything else. How long? I think another 4 or 5 weeks because of the US chart that I showed you. Let me just show you that chart again. It's really a question of how much longer this bad news keeps coming out from the markets. The US Senate will tell you later today that they've come to some agreement on how much money they're going to give the markets, and the markets will rally probably 1,000 points. Then tomorrow, they're going to not make an announcement about fiscal spending, but what will happen is there'll be a sharp rise in US deaths. So guess what will happen? The markets will drop 1,000 points. That's what's happening, just so you can understand what's been going on at the moment. And that's what I'm basing my judgments on right now. Here we go. Hi, Alpesh. No, it's not the topic. That's fine. Who do I contact for an update on the new version? Oh, we're on version 4. It seems my original password is... send me an email, Renee. We've updated all the security settings. So I'll send you the new username and password on that, Renee. No worries. Now, let me just make sure if there's any that I've not answered. I think I've answered all of them. That being the case, oh God, what am I saying? Who am I kidding? No, I haven't. Let me answer some more. What do you think the probability of a bear market rather than recovery following this crash? We're going to have recessions. What's the probability of a bear market following recovery? I think I've got to be able to distinguish, and I used to say this on BBC and Bloomberg. I've got to be able to distinguish what I wish for, my emotions, my psychological biases, from what I think is going to be reality. That's the mark of a good hedge fund manager. And at the moment, I am too psychologically invested into it being a V-shaped recovery, because yeah, I know there's blue skies and sunshine outside, but my God, we're feeling. So I'm hoping it's not going to be a bear market and a recession and things slowly going sideways. You saw the statistics I gave earlier about how quickly things recover. I'm hoping it's going to be a V shape. But I really at the moment having difficulty, assigning what is that, me clear thinking or is that my emotion speaking? So that's why we trend follow. That's why we do, those of you who've been on my trading webinars, that's why we trade and don't just invest, because I want to be in a position to look at some of this stuff and just say, look, I don't know when this is going to, let's take Barclays. This is Barclays, okay? And that short trade, you'll know we had from before if you followed my earlier webinars, okay? So, and little did I think this was going to fall this much. That's my point. I don't know how much this is going to fall. I don't know if this is a bottom. What I do know is when we've got a trend, and therefore I'm trying to forecast less because the probability of being right increases more then. Does that make sense? So that's why with something like this, we trade. That's why we do the trading side of what we do for exactly that reason, because we're not seeing further ahead than you are. All we're doing is we're looking at each day at a time or each minute or each hour at a time and saying, yep, we're still willing to be short. Hope that answers that question. Got a whole load more. The Fed has announced unlimited QE. That's right. Is this in effect underwriting the market against any more big falls? Sort of not. And I'll tell you why. Let me answer it this way, my friend. It does mean there's likely to be some bottom, but we don't know when. Let me answer that. The Fed said unlimited QE. I can still sell Barclays short. Why would I be selling it short? Because I think, for instance, I might sell it short because I think, well, the trend's still lower. I don't need a fundamental reason for that. It could be unrelated to that. So the point is, just because they say that doesn't mean that suddenly earnings have turned around. It means there'll be a bottom. It means they want a sharp, short, V-shaped recovery. Does that mean that's going to happen? No, because economics and financial markets are cousins. They're not siblings. They're not twins. Okay, so they're distantly related, and the causal relationship can fail as well. Are you invested in any house builders? Both will feature on January, February, possibly a croquis table. At the moment, no. I'm not. They were in that table. You're right. From January, there was a whole bunch of equities. You also remember which ones I bought and which ones I hadn't, because I can't buy everything, like I said. I will try and get some things over to you on house builders. It's going to be a bit difficult doing it right now. Obviously, they will have dropped, but they've got assets, low interest rates. Maybe they'll come back, but I've not got them at the moment. It's not something I've been looking at right now. After Brexit, you will remember I sold a whole bunch of US stocks, bought the cheaper pound, bought into house builders for 3 months, then got out. That was a clearer trade than it is now. It's not one we're doing right now. Okay. All okay. Okay, so the unanswered, I think I've answered everything now. What I'm going to do is I'm going to make sure these slides are on. They're on Trading Champions again. You've seen these anyway. I think I've put some of these up. I've updated one or two. I will also make sure the Excel spreadsheet, which shows croquis and so on, is on there for those interested in it as well. And I just want to make sure that I've covered everything, because there's a whole bunch of other stuff. We've overshot by a long shot, more than I anticipated. I will in a future one cover things like the exchange traded funds, even for currencies. So for instance, as you'll know from my Telegram channel, I am long US dollar against sterling. In other words, short, say that again. I am long sterling against US dollar. Have we bottomed? We might even go to parity, but I'm willing to do that for the long term and hold it. Why did I not then do it as a spread bet or CFD trade? Well, because as an exchange traded fund, there'll be fewer inherent costs. Here we go. What about auto? What about auto and telecom industries? It's not come up specifically in this, and I don't speculate based on sectors. I look at, for longer term, fundamentals, some of which I've shown you earlier. Let's show you some more. Here's a chart that I hadn't shown earlier. So let's show this one. I look at fundamentals such as, I said, Altman, croquis, my own. Where's Alpesh Patel's? Where's it gone? Here it is, value growth rating, my own value growth rating. Now, obviously, earnings and everything's out of the window at the moment. All right, which is why I've started to put far more weight on Altman Scores. You can read it there on, oops, let me just say I'm done answering that so you can read it on screen more easily. Altman Scores, okay, what they mean and all the rest of it, or croquis. You know, I want to look at croquis as well for that reason. And there's too many, obviously, stocks to go through, but yeah, I hopefully I've answered that question. Are you personally invested in physical gold and Bitcoin? Are you invested? No, I'm not in either of those. The QE inflation play, I did say to somebody, God, inflation could be crazy. Having said that, remember, I've got limited pool of capital. Where would I put it? I wouldn't put it personally into gold on the basis of an inflation play when, for instance, as I've shown you, I can buy double leveraged Apple, or I can short Barclays, for argument. I'm not saying short Barclays today, don't, but what I'm saying is, given that we were short that position, so they would have had a higher priority. I'm not saying there won't be inflation. It could be massive, but I'd rather see some data and evidence first and get in later rather than try and get in too early, because then I'm trying to gamble on speculation. I don't gamble, I don't speculate. Okay, what I do is I ride the coattails in the short term of trends, and in the longer term, I look at hard data. I look at cash flow, capital, the amount of capital they've retained, the companies have retained, how much cash they've got, because cash really is king at the moment. Okay, which instruments do you use for long GBP? Right. So the point here was I used an exchange traded fund. Why? Because I might want to use that position. I might end up holding that for 2 years. So I'd rather do that through an exchange traded fund. The brokers and the exchange traded funds are all available on trading-champions.com. It's on there as well. And I started off on that, okay, as well. Whoops, here we go. Sorry, Alpesh, but do you have a list of all leveraged ETPs on offer in the market? I do. That won't necessarily help you. The ones you need, the exchange traded products the list you need is which your broker offers. For a list of brokers, it's on trading-champions.com. You'll see it there. Those are the most important ones. But I do have a list, which I showed earlier, of all let me try and put it up back on the window again. Here we go. I will be able to do that for you. Maximize window. Here we go. I do have a list of all exchange traded products, and this is it. And if you were to ask me, oh, which ones have gone up and which ones haven't over the recent past, well, I would say to you these. But like I said earlier on in the webinar, I haven't gone through each and every single one to make a determination. Why not? Well, because there are 5,329 of them. So what I have to do then is narrow down. I look at recent performance, I narrow down, and then I'll put it on Telegram which ones I happen to like. You might like different ones. You will know I like leverage shares, Amazon, Apple. What was the other one? I've forgotten now. Amazon, Apple, and there was another one, which is famous company. God, I might need an Alzheimer's drug soon. But anyway, what's the reasoning behind some of this? Well, you can see the reasoning is because from $34 to $42, you get a bigger rise. I don't mind holding this for a long period of time. The fact of the matter is, it's a company with a lot of capital. I don't mind holding for a long period of time. If those two factors are in there, I don't mind holding for a year, 2 years, 3 years, and they have a lot of cash in the bank, like an Amazon, like an Apple, like a Google, then those exchange traded funds at double leverage are not bad. And I've been going on about this for weeks now. Okay. I think you mentioned Microsoft. Yeah, Microsoft, lots of capital. I haven't bought into them yet, but I'll have a look and then do the analysis first. Okay. As a hedge fund manager, do you invest in stocks, then hedge their position short using leverage only? No, they're two different things. We have two different programs. One is the trading side, which on the trading, we're not investing, obviously, we're just trading. So let's say we were trading, then we're just trading long and short, and that's it. And there's hedging, which is done essentially across different time frames. So we might be long Amazon over a daily chart, but short it on a 15-minute chart. Then there's investing for the long term. That's a completely different thing. That I do more on my personal account. Now, on my personal account, I might be holding Apple for forever. I'm holding Apple forever. Okay, I've taken some profits out because now it's just a free play because I've taken my original capital out and it's just free money going up and up or down and down. I would happily look for short-term opportunities to short that, which, as you know from my webinars, I've been talking about for a couple of years now. Whenever that happens, we short Apple, but that's how I hedge it on a personal account basis. Okay, just so you know. Sure, the exchange rate will offset many of the leverage products gains on US shares. It depends if they're quoted in US shares or in sterling. They can be. You can get hedged US dollars, hedged. So that it's hedged inside the instrument. So in that case, the currency wouldn't make a difference. I don't mind holding assets in dollars. I have dollar assets. As again, if you've been following me for years, you'll know that I see that as part of my diversification anyway. Okay, so there's that part. Right, who we got? What's the ETF name of US dollar GBP long? It's a very good question. What did I do? I put it on my Telegram channel. I might have to refer you to. Let's see if I can find it easily. Can I find it easily? Yeah, I can actually. Here it is. Wisdom Tree Long. There we go. There we go. There we go. Wisdom Tree Long GBP short US dollar. It's GBPP. Okay, so let's just put that epic code. All right, there you go. But your broker should allow you to search by name, So that's been falling. I don't mind now getting in. Look, is it the bottom? I don't know, but I don't mind holding that for a year, 2 years, because the demand for US dollars at the moment is ridiculous. They can't even meet it. So I can see the dollar, of course, strengthening some more and the pound falling a little bit, but I'm not trying to bottom pick. As long as I'm roughly around the bottom, then time is my diversifier. Remember, time is one of the best. If you elongate your time horizon, then you're reducing your need to be right. So, if I'm wrong by 5% on 10% on sterling dollar on cable, maybe, but because I'm willing to hold it for a long period of time now, given where it is, I don't mind. Okay, I'm done answering that one. I'm in the same situation. Not sure what that meant. BAC, Bank of America. you trade options, Alpesh? I used to, for the leverage. I used to trade options. I haven't for a good number of years now, but I can tell you anything about options you need to know, from Vega's rate of change of volatility all the way down to I used to go long options just for the leverage, and CFDs came along, became more prevalent, so I don't. So it's been 30 odd years now, but I still remember all of it with options, and often have options discussions with bankers on what we're looking at. I also used to sit on the advisory board of India's largest bank's private banking division, ICICI Bank, and so we would create structured products, and as an advisory board member, it'd be my job to advise on, and those were embedded options on what products the market would need. Okay, so we've done all of that. I think that's everything. Listen, guys, I'm going to go because I've carried on longer than I anticipated. I hope that was useful to you all. Any more questions, just email me or whatever. I will try and I'm going to do another one of these next week as well. I'm going to put these slides up on trading-champions.com. Also look at the Telegram channel. You should all have that as well. That will help make sure that you're all up to speed on what I'm doing, what my thoughts are, and what I'm buying. At the moment, there are more opportunities than I could possibly look at or put money in. So I narrow it down for my own personal circumstances. That's what I'm saying. So I'll try and, when I narrow those down, put them on the Telegram channel. And similarly with the trading, I mean, you look, the investing might generate me a return in a year, in 2 years, in 3 years. Obviously, in this kind of trading market, we will get a return on our trading instantly. We get it 5th of March. Then we're short New Zealand dollar, Canadian dollar, and then we're short again, right? So you get that instantly. That's why we continue trading as well as investing. We would expect to make 3 times more on trading than we do on investing. Why? Because that's the rough ratio by which we've realized that the trade-off's worth it. So I will also post on trading as well as the longer term investing stuff. Most importantly, hopefully financially educate people. That's my biggest, most important goal. Anyway, listen, thank you all for this. Sorry if I've gone on way too long. God knows what I'm going to do about a haircut. All of you, please keep safe. Stay at home. My cousin is a doctor. My father's in dialysis. If I had a magic wand, I would make this go away, and you can keep all your money and you can keep the markets. I would make it go away. So, and I've asked the doctor, what's the best way not to get the virus? And he said, stay at home. And I said, what if he goes, no, stay at home. I said, well, what if no, stay at home. Well, what can I just, no, stay at home. It's that simple. Keep well, all of you, and best wishes to you and your families. Thank you.